Bitcoin und Co. Der Podcast über Kryptowährungen, Blockchain-Anwendungen und das digitale Leben. Mit Buchautorin und Bitcoin-Expertin Anita Posch.
Hello, my guest today is Rahim Taghizadegan. He's an economist, book author and principal of the Scholarium, a learning enterprise based in Vienna, Austria. He studied physics, sociology and economy and is an expert on the Austrian School of Economics. Today we are going to talk about the interconnections between a cryptocurrency like Bitcoin and the ideas and philosophy of the Austrian School of Economics. And we will take a look at the broader picture, the economical context in which we currently live and act. Hello, Rahim. Thanks for taking your time for this podcast. Hello.
Thank you. Hello.
Can you please introduce yourself and talk about why and how you got to know about Austrian economics and what was the reason for you to found the Scholarium?
Interesting thing is I've grown up in Austria, but I haven't heard about the Austrian school in Austria. When I was studying economics, it was only through natural science that I went to the United States, and there I happened to discover that there's a tradition called the Austrian School of Economics, and I was surprised. I already had a deep interest in economics and philosophical questions, and I was surprised to find out more why this tradition has disappeared in Austria and how it has lived on in the United States and why it's still a vibrant tradition. And at the time, even in the United States, it was quite a fringe tradition and fringe school. And it was only with the financial crisis in 2007-2008 that the popularity or knowledge about the Austrian school has increased, because it has proved itself to be more realistic outlook, in particular of the financial markets. One major aspect of the Austrian school is its business cycle theory. So it practically helped quite a lot of people to better survive the up and downs in the market.
And when you came back from the US, you founded the Scholarium?
No, not immediately.
Not immediately.
Back in Austria, I was a bit surprised and frustrated how economics was taught at university. It seemed to be quite ideological. I had studied physics before, and it was quite normal that if you find an error, let's say that the professor is teaching something and you point out an error on the blackboard, he'd be quite appreciative and say, "Thank you, I missed something." And in economics, I found that it usually escalated into ideological debates. What I found perceived to be errors or unrealistic premises and assumptions, I found usually there's not such a strong background in really explaining why you use certain premises and how you reach certain conclusions. And that was a bit frustrating to me. And it still is. I'm still teaching at university. I'm even lecturing in economics. And what's highly frustrating is that usually with your colleagues in economics, there is scarcely any debate on methodology, on how you approach the subject. It's a quite bureaucratic field, I'd say. So most is about who gets to teach which hours and what time. And then in particular the students as well, particularly in the field of economics, most of them don't really have an interest in economics. It's like they take economics because they think, well, that'll get you a job, because jobs is the economy. So if you learn the economy, it's supposed to be something very general and preparing you for being part of the economy. But I had discovered that economics itself is a part of a very rich program of understanding real human beings and interactions of real human beings. And it's something that you do out of curiosity for what's going on. So that's frustrating as well. And I found I reached the conclusion that it's too late to try to reform the university from within, in particular in the areas of the human social sciences. And that's why I founded the Scholarium as our motto, our aim of being is to be what the university could have been but was never allowed to be. And there's this open-ended, curious approach to understand phenomena in a very interdisciplinary fashion. And we've been trying to do that for more than 10 years now, and I still think that is the right approach to not only economic phenomena, but phenomena of human beings interacting and forming all these magnificent, complex phenomena that we try to study in economics.
Mm-hmm. But why is the Austrian School of Economics so unknown? I mean, I admit before I was interested in Bitcoin, I had no idea about it too. And also, you don't learn anything about economy in general in school. I mean, that's a big problem. I mean, you said you studied physics. Yeah, you learn physics, but you don't learn the basics of economy or a entrepreneurial way of thinking and living in school. You don't learn it. It's a system, or I mean, maybe that's the reason for it. It's a system to produce people who work and do their jobs. I mean, that's maybe very extreme, but do you think it is in a way like that?
Yeah, well, there's something odd, of course, and there are political motives as well, but it's a bit more complicated picture. I mean, the tradition Austria disappeared with almost every other scientific tradition in Austria because we had a totalitarian phase being part of the German Empire, of course, and most representatives of the Austrian school had to leave Austria. But then economics itself took a turn, and it took a turn towards trying to copy the methods of the natural sciences later on. And it was not copied in a very good and profound way. It was rather copying the results of physics and mathematics of 100, 200 years ago, because even modern physics would lead you to a more appreciative picture of dynamic complex systems. But what turned out to be more feasible was to consider the economy as if it was a static system, which you can easily model using fairly simple equations, and where in the end you can have quantitative results. And the need for those quantitative results comes from politics, of course. You need numbers because numbers somehow seem scientific, and there is a lot of political interest in economic numbers. Just try to figure out if the inflation rate, if it's 2% or 3%, that's billions of euro dollars that are really on the table concerning these numbers. So there's a big political interest. And it was Schumpeter, not a representative, but a student of the Austrian school, who realized that politics needs numbers. It needs numbers to legitimize and rationalize its decisions. And that's why economics took a turn to become a more quantitative science. And it's usually econometrics, which is quite dominant nowadays. But the problem with human beings is that they don't behave like particles. They are living, vibrant beings which are able to learn. And so from a methodological point of view, it doesn't really make sense to treat them as if they were particles. In particular, if you treat them as if they were particles like in the simplest physical systems around, because even in some more complex physical systems you see a behavior which is still not predictable. You have chaotic dynamics and so on, and economics doesn't even have reached this level of complexity, yes, I'd say.
And with this complexity also comes the problem of instability, or so not knowing what will be the next. Nobody can say what comes next.
Yes, I call it profound uncertainty. And the interesting thing is that it's only with uncertainty that you have entrepreneurship, and it's only with uncertainty that you need money. Without uncertainty, there wouldn't be need for demand for money. If you knew in advance exactly your preferences and how everything else in the world will be shaped at the time when you need it, you just have a direct exchange. Indirect exchange, and the demand for money is always due to uncertainty. It's to cope with a future which you can't tell right now. You don't know which human beings will be your cooperative partners, your exchange partners, and so on. And so interestingly, neoclassical economics, by leaving uncertainty out of the picture, has largely ignored the entrepreneur and has largely ignored monetary theory. And I find it quite odd that I think that those are the most important and most crucial features of a real economy. It's entrepreneurship and money and coping with uncertainty. That's
interesting. What is money in the Austrian School of Economics, or what's the definition of money?
The most important thing about money is it's an emergent phenomenon. That's the starting point of Karl Menger's analysis. Is to see money not as some concrete object in the world, but a phenomenon. So it appears out of human interaction. And it's an emergent phenomenon, which means that its complexity tends to be higher than its simplest elements. So it's not just coins or something, it's the whole complex phenomenon that arises out of human interaction. And emergence means it's not designed, not necessarily designed, and not necessarily constructed by one single mind. Of course, there may be single minds proposing and changing something, but the process of adaptation of something as money is a process of discovery, where a lot of individuals try something out, have their own ideas about the future, and they discover something. They discover that certain goods or certain devices differ from other goods. And the main aspect of moneyness, which you would have to call it, is that there are some goods which are more marketable than other goods. Which means if you acquire those goods, you find your exchange options increasing. You have more access to more markets, more people, in comparison to a certain physical good, like, let's say, coffee. I'm restricted if I exchange coffee with people who like coffee. But there are goods which are more marketable than coffee. But in order to discover that, that's a kind of mutual discovery procedure, because there's always another party which might say, no, I don't see it that way, I don't trust it. So that's the interesting thing about money. It's an emergent complex phenomenon. And it's a discovery that is more of a characteristics of certain aspects of human action. And this characteristic is higher marketability, or you might call it liquidity, but I tend to prefer the term marketability. It was Menger's term as well. It's what he discovered. There's a distinct difference between groups of goods, not only between consumption goods and producer goods, capital goods, that what he discovered as well. Different orders of goods, but there's another category of goods in itself, and so money is not just capital. Money can be transformed into capital, but when it's transformed into capital, it loses part of the marketability and the liquidity, so that's where uncertainty then comes in and creates entrepreneurship, and it's a totally different outlook onto economic phenomena, I'd say.
I mean, one of the biggest problems now is the massive amount of debt we have. Mm-hmm. And there's so much money around, which doesn't know where to go. And I mean, my conclusion is then people immediately want to buy things, they consume. Mm-hmm. And the other people who have more money, they buy property and high risk investments, etc. So actually, in the middle, the people in the middle, they spend their money because saving is not an option, because if you give your money to the bank, you lose value de facto. Mm-hmm. So in this world, where also mass-consumerism seems to be the holy cow in a way, you know, everybody says we have to grow, we need growth. That's the only way our economy and our growth and our wealth can sustain. But I mean, in today's world, when we see what's happening on our planet, like global warming, etc., all those problems, growth cannot be the answer. Or this kind of growth. What do you think?
Oh yeah, that's a very complex problem. Of course, it's that people are usually not satisfied with how emergent phenomena come about, because you can always figure out a world which seems to be better designed, better constructed. So there was a political process going on reacting towards what people had discovered as more marketable goods. Because the problem from the political point of view is that most people seem to hold on to money. They seem to be hodlers or hoarding money to a larger extent than economists or politicians found reasonable. So we have seen throughout history a fight against hoarding, and trying to make people spend money has led to a lot of interventions, in particular money losing its purchasing power. And that's one of the very few constants in history, is that almost every money has lost purchasing power over a long time. And this loss of purchasing power, of course, comes about by increase in the supply of money, and in particular in an intervention in the interest rates, which pushes the interest rate very low, lower than it would be if it was only according to the decisions of people, how much they save, how much they invest, how much they consume. We now have interest rates almost at zero, which means it makes sense to get debt, to get a high level of debt. It's not costly. What politicians and economists had expected is, with it being easier for people to get credit, they would start investing. Small people would become entrepreneurs. It would be easy to make money. But the thing is that has happened is the majority has not become credit-financed entrepreneurs, but credit-financed consumers. So that's the mass consumer that you mentioned before. So I think in the end we can say it has failed, but not most people won't agree yet that it has really failed. It's still say, well, material wealth has been rising enormously, and that's true. The thing is that we have huge distortions in this world, and you need the analysis of the Austrian school to understand those distortions, and that's the core of the business cycle theory. That tells you, pay attention if the quantity and the quality of money changes by fiat due to an intervention, the economy will move away from the preferences of the people. So it might be that there's more consumption than in the long term people would be willing to sustain, and there's more long-term investment than people are willing to bear with their consumption decisions. So you find an economy that's more and further away from what people really in the long run would like to be around. And you have these cyclical corrections happening. There's depressions, corrections on the market, the cyclical boom-bust cycle. And the zero interest rate leads to a continuous devaluation of money. And that, of course, leads to the necessity to always keep track with this devaluation. Nowadays, you can't just save money. You'll lose it over time if you just have it in your bank account or just put it in your piggy bank. You need to invest it, which usually means nowadays you need to speculate. You need to buy shares or bonds. And there's a huge pressure. There's a huge opportunity cost if you don't do that. And that leads to this growth cycle. You really need that endless growth in order to just make up for your devaluation. If there wasn't this growth, you'd realize, human beings, that you can really provide for old age because your savings will devalue. If there's not ongoing increasing material output and increasing possibility to consume, and if it's not yourself, it'll be the state, which incurs debt and then redistributes money so that people can go on consuming in old age. Without that, there'd be a massive correction, which most people wouldn't be willing to take. So it's a kind of a vicious circle going on. So we don't have any way to an alternative economy? Or would it be a very disruptive? The problem about politics is always a 0-1 decisions. It's grand scale. You think about the euro or the dollar. You think about managing a whole currency area. And that, I think, is what you call a hubris. You assume that such complex phenomena are controllable in the large scale. And the problem is those systems are not capable to learn anymore. It's not this discovery process that I mentioned earlier. You can only have that if individual people are able to use something else, to try something else, to learn from their mistakes, that you can learn from other people. So I think with cryptocurrencies we see the very interesting phenomenon of something emerging quasi at the side, at the fringes of societies, people trying out, playing with things. And that's the usual way how innovation happens. It's very unlikely that you have a political switch which somehow has a solution for everyone instantaneously. So usually it's processes that happen all the while, and they're dynamic and going on, and we can tell what will be the result in the future. But of course, with more and more people realizing that it's really difficult to provide for all ages, it's really difficult nowadays in the economy to invest or even to finance a small-scale company. You're looking for alternative ways. You have these cartels, the banking cartels, and exchange cartels, and for a small company, even though we have massive credit inflation, it has become more difficult to get a credit from a bank. It has become immensely expensive to be a listed company and get investors from the outside. So it's like a vicious circle. You need the millions before being able to raise the millions if you go the traditional pathway. And that, of course, leads people to try out other things, play with other things, and that's where change can happen. Just by being an example, people learning from it and saying, oh wow, that might just work. I give it a try.
Eine kurze Einschaltung unseres Sponsors, der Firma Coinfinity. Vielen Dank für Ihr Verständnis. Es geht in Kürze weiter.
Dieser Podcast wird freundlicherweise unterstützt von Coinfinity, einem österreichischen Bitcoin-Broker und Kompetenzzentrum für Blockchain-Lösungen. Kaufen Sie Bitcoin, Ethereum, Litecoin und Dash über die Website von Coinfinity oder auch in jeder österreichischen Trafik über das Gutscheinprodukt Bitcoin Bon. Coinfinity bietet auch die sogenannte Bitcoin-Wertschrift an, physische Bitcoins, die eine langfristige und sichere Aufbewahrung ermöglichen. Weiters berät Coinfinity Unternehmen bei der Nutzung von Kryptowährungen und der technischen Abwicklung von ICOs. Kundenberatung wird bei Coinfinity großgeschrieben. Rufen Sie einfach an, kommen Sie im Office in Graz vorbei oder besuchen Sie Coinfinity unter www.coinfinity.co.
Do you think that, if we take, for instance, Bitcoin, which today is the 10th birthday of the Bitcoin white paper, which was, as far as we know, born in the US. I mean, that's we don't know where it was born, but yeah, you can guess. Do you think that countries like China or Russia will accept that? I mean, they cannot really forbid it, but they can have regulations or something. Or maybe do they maybe see it even as an alternative to the US dollar being the world currency, so that the Chinese and the Russians and other countries say, okay, at least now people have their private money, which is an alternative to the US dollar?
Definitely. The US dollar is the reserve currency right now, and that leads to an exorbitant privilege for the United States. They're able to inflate the amount of dollars to a much larger extent than they're capable to produce goods and services which people really want. So it's basically backed by a military power. That's just history. It's nothing bad in itself. It tends to be that there's dominant power at a certain time in history, and its currency becomes the reserve currency, as we had with the British pound before, when the British was still a global empire, and so on. And right now we're in the time of the American empire. You have to call it like that, even a value-neutral way, I'd say. And potentially a Chinese empire, Russian empire would be worse than what we are having. But there's quite an interest in asking the question, what might be after the dollar as a reserve currency? And we are seeing signs right now that there's a kind of discovery procedure going on, and the question, might the world go back from a unipolar order into a multipolar order with more competing geopolitical structures? And of course the Chinese and the Russians will have would like to have a larger share of the cake, and so they're experimenting, and but they have a top-down approach, so they haven't really welcomed cryptocurrencies. They should have, I think, because really the main right now cryptocurrency would be mainly a challenge for the dollar, because going into cryptocurrency more or less reflects reducing trust or reduced trust in the dollar as the main reserve currency. So an alternative monetary order would need to have different currencies or a mix of different currencies and different assets maybe as well. It's possible that gold might play a larger role. The Chinese and the Russians are acquiring gold to a very large extent, but at the same time they are interested in cryptocurrencies, and I think they are right now examining if it's possible to have a top-down controlled cryptocurrency, and that's of course where they're going, where they're experimenting. I think it refutes the main purpose of a cryptocurrency, because the whole blockchain idea, it doesn't make sense to have a blockchain if you want a centralized solution. That's what I think. But still, they're piggybacking on this discovery out there, and we can tell. Maybe people are gullible enough to buy a Chinese central bank emitted cryptocurrency sometime in the future, and maybe it forms part of a portfolio which is meant to replace the dollar in international transactions, maybe in oil exchanges and so on. So I think that's one plausible way that they are trying to analyze and examine. And I'm convinced that sooner or later the reserve currency dollar cannot be sustained forever, because having the reserve currency leads to a negative side effect. It's that for a long while you're enriching yourself at the cost of other countries and other producers, and at the same time you don't have to produce at the amount that you're consuming. So the US is leading in consumption, but is lacking in production. And if you look at the production infrastructure in the United States, it more or less looks like a third world country right now. You see the Rust Belt and so on. And that's all due to the possibility of the United States to just export dollars. So people have to buy dollars not because they want American goods and services, because they need to buy resources and so on. And if you want to buy oil today, you need a dollar, or they want to invest in US bonds. It's the financial markets that gather a lot of those dollars running around, and they don't have to purchase American goods. Otherwise, we have totally different exchange rate, may even be a hyperinflation in the United States, because they can't back that demand up by production.
Speaking of backing up something, what role should a nation state play in your opinion? It seems that the state as a concept to, as I see it, protect and build basic infrastructure for its population is not the worst idea, but ideology and personal political interests often destroy or have already destroyed the trust in the systems. How would you envision a setting in which as many people as possible could be leading a good life?
Well, the question is if the national boundaries are still working, and there was a lot of change in the economy. I think a lot of the politics has not reflected the change yet. So people and capital has become more mobile. So in the end, it leads to a hefty premium you have to pay if you're not mobile, because the tax system gets you and you're stuck more or less, and you have to make it up with a very high productivity if you're left over, and that's a fight which I think you can't win in the end unless the states become more totalitarian. So I think there'll be a process at one place, the national state trying to control more of the inflows and outflows. You'd have more capital controls potentially, and you'd have efforts of states to tax you globally and follow you around the globe if you're a mobile person. More and more young entrepreneurs tend to become mobile. And at the same time, you'll have people react to that nation state. So in the best sense, a nation state may become a kind of community of identity, of people caring about something and having something in common. It's not obvious that it'll be delimited by national borders. More or less, they're a pragmatic solution to a problem that of course, in a distorted world in particular, it's hard to figure out a borderless globe as we have, in particular if you have states trying to control money out of all things, which leads to a lot of distortions. So, of course, the national state will not disappear, but we have two contradicting tendencies. The one tendency is to rather move towards a global, all-controlling state or kind of alliance of nation states to control things which they can't control anymore on the local, national level. And on the other hand, you'll have reactions to that and still a kind of competition. I expect the geopolitical order, as I mentioned before, to become more multipolar. So that makes me more optimistic. I like checks. I like that it's not an unchecked development into one global, all-controlling state. And I think cryptocurrencies play a very important part in that process. Because the problem with the nation state, it started as not such a bad idea to have a kind of cultural area, in particular German nationalism, which has turned out so bad in the end. It started as a quite benign phenomenon. You had a Goethe and so on, a kind of cultural movement of having more people using a standardized version of the language to communicate. And you have a similar process in China, of course, with becoming more Mandarin dominated. But at the same time, you have this political illusion that you can use this people becoming more similar to each other and having more cooperation in a way to control them bottom down and impose something on them. And their politics usually is lacking behind. It's just it can't keep up with the pace of development. And then it produces a lot of paradoxical results. If you try to intervene, if you try to change things without understanding them first, if you try to fix emergent phenomena, usually the results are to the contrary of what you expect. You make it worse. And that's the big danger of the nation state right now, by trying to fix things, making them worse, and not having kind of liberty you need to experiment with the future as it is happening.
What does the Austrian school say about taxes? I mean, is this in this theory, part of this theory, or how? I don't know.
Yes, of course.
Yes.
You need economics to analyze the impact of taxes and taxation, and there you see that taxes, of course, are incentives as well, so they punish something, and that, of course, leads to distortions, and you need to bear that in mind if you tax people, and usually that's not done. So economic analysis usually is very superficial. Right now, mostly economics is used to rationalize your interests. So you employ those economists that will write a study that gets the results for if you are in favor or against a certain tax, you go for them. You really need to look at the long-term impacts and then think about what does it punish. Am I punishing things of which I want to have more or not? And then taxes become quite problematic. Ludwig von Mises preferred financing of the state via taxes than via credit expansion. So, of course, there's another problem. You can reduce taxes without reducing expenses, as the United States has been doing under Reagan and it's doing under Trump right now. And I think that's worse than having high taxes, because you have a distortion, which in the long run leads, of course, to an immense credit inflation, and it's now driven by the state. So I think Reagan was not really beneficial in the long run for the US economy. I think there was this faulty idea of financing the state via credit and not via taxation, because taxation at least is something you feel, and people realize the effect immediately, And it's more or less, I mean, of course, it's a utopian idea, but you have this majority deciding and agreeing on their tax level according to what they want the state to provide. Mm-hmm. And it's more of a match, generally. I'm still skeptical about the majority deciding everything and to every degree, but still it's close to what the preferences of the people would be than the way it is now.
In another interview, you said that it will be interesting if Bitcoin correlates with the rise and fall of stock markets or not. What would it mean if it is correlated or not? Mm-hmm.
If it was correlated, there will be bad news for cryptocurrencies because then it will be just another cyclical asset. And there is no lack of cyclical assets. What we really need are anti-cyclical assets because we have an everything bubble right now. And it's the first time in history that we had throughout the last few years shares and bonds and almost every other asset increasing at the same time. Then it becomes really difficult to bear the uncertainty of the future. So it needs some kind of communicating assets in a way that you always have a possibility to hedge against a bubble going on. Because then we know for sure we have the cyclical pattern. We never know for sure when the next correction is going to happen. We just know it will be coming one time. And there'll be just a much bigger need for cryptocurrencies if they will provide counter-cyclical assets, which are not just a result of the increase of the money supply, because that's what makes everything cyclical. Just as you said before, more money chasing few and few investment opportunities. So just by necessity, if something is scarcer and the crowd discovers it, its price will increase, and that's not a good thing. I mean, share prices increasing is not at all a good thing. It's only if you're speculating in shares, but it means that it becomes more and more expensive for you to buy productive assets, and you are getting impoverished. You're getting poorer and poorer compared to the stock market. And that's a bad thing. And if everything will just increase in price, that's of course against what you want to do if you hold money. You want to provide for the uncertainty of the future when your income might go down and the world may change and you have different needs and so on. That's why there's a real need for counter-cyclical assets, and that's why I hope that we'll see, and that you can only see after a few cycles, I'd say, if Bitcoin is a correlated or uncorrelated asset. Otherwise, the hype that we had seen until end of last year would be just another aspect of money purchasing investment opportunities. And of course, it's obvious that it was part of that. Of course, there's a lot of money running around. That's why you get these huge increases over a short time. It was not just usability increasing, not just people discovering it. Of course, it was driven as well by just money purchasing scarce things. So we might have some overshooting, but I'm still optimistic that we may see, and we have seen for the last few months, I'd say, I liked the development. I liked the correction of Bitcoin. I think it was good news that it corrected much earlier than now we have the FANG stocks even correcting. So we're not sure if it was just going before and then would be more correlated and now going sideways. We can't really figure out, but the odds have increased more that it's not correlated with the other assets.
What do you think? How long will it take until we know if it correlates? Like 3 years, 10 years?
You can never know for sure. That's the problem. But the more and more cycles you go through, the more confident you become. So it needed a few cycles to realize that bonds and shares are not used, not to be correlated. But then the last boom has proven that false. So that's, you may learn after 100 years that something has changed and it's not working as it used to be. But Bitcoin hasn't really lived through one cycle yet. So it's a fairly young phenomenon, and you can't really tell how it would have performed in the last correction, 2007, 2008, because that was too early for Bitcoin. So we'll have to see how it performs, how it does during the next correction of the market.
Next, or after Bitcoin and those cryptocurrencies, now the so-called security tokens and token economy is coming. To cite a guy called Anthony Pompliano here, if cryptocurrencies like Bitcoin are considered programmable money, then you can consider security tokens a version of programmable ownership. This means that any asset with ownership can and will be tokenized. For instance, public and private equities, debt, real estate, etc. This would mean that tokens can be issued, for instance, on my real estate, and I could sell this token in a small amount, or in small parts. This would bring much liquidity. Is this a desirable thing to be?
Yes, I think it'll be desirable in the end, because you don't need a cartel anymore controlling what things can become tokenized and which can't be. But of course it leaves much more to judge to the individual investor and buyer beware in a way. The problem is with tokenization are two problems. The first one is the regulatory framework is very much against security tokens and very much in favor of utility tokens. And of course, tokenization of ownership is all about the securities. It's securities that you have. And I think it'll be great to have securities which are not emitted by banks or listed on stock exchanges as they are, because I think they are cartels which are not favorable for the small guy using them. So, but of course, there are a lot of people who would lose out of that additional competition entering the field. That's why it's practically illegal to have a security token, and it limits a lot the possibility of using tokens as representatives of shares and so on. And there's another problem, of course, there's the link between the digital ledger and the real world. You'd always need to have some oracles with all the problems and incentives and so on. That's a kind of institutional problem to be solved. Or you could use the Internet of Things, some kind of attachment to programmable tokens, but that of course brings about other problems. I mean, one way you think about it is to have a house and the programmable key, which only opens if you have the right keys, key phrases, and so on to use it. But that brings about other problems. Of course, it's hard to imagine if you could really control it entirely via technology without any institutional framework. And it's the trade-off, because every institutional framework needs trust usually. And well, we are in a phase where trust is rather decreasing. That's why technology becomes so important. You try to find technological solutions to problems of trust. And I think that's a very interesting part. And of course, there's nothing bad about having equity tokens or representatives of equity. I think every complex economy needs some kind of representatives. But it's always the question if the trust will be abused by issuing that, and if the incentives are right. So you have a problem of credit expansion only if the representatives do not match the backing by assets anymore. So you abuse the way that's a digital thing, and you can't really track it to emit more than you have. And then it's just a token. It's not a security token. Then it's just token money. And I'm skeptical about just token monies. They could work in very high trust small communities. There you can have an entirely token money. It's just a ledger of we agree that I give you 5 points, you give me 10 points later, and then it's not that important to have a security which needs an institutional infrastructure, which also means if you have a conflict, who solves the conflict, who gets the money in the end, who gets the car in the end, if you disagree. And if you are ready to live with a technological solution, but technology tells you, wait, you can't use your car anymore because your key doesn't fit, and you're not apt to like just break in or destroy it because you're angry. I think that's the kind of cultural development which still be needed in order to really accept programmable tokens in place of any institutionalized structure, which we have right now. And it's working. It's just a problem. It's working just for a minority of the population and not working for everyone. I'd have a hope that a more decentralized solution might be more in the interest of a larger part of the population in the end.
So now that we are sitting here in the Scholarium, and you have many books, do you have any book recommendations on, for instance, the School of Austrian Economics or cryptocurrencies, or in general, for maybe you have a book you really like that much that you want to recommend it about entrepreneurship or how to lead a good life, because I think that's also something you learn here.
Mm-hmm. Yes. If you really want to understand money, the phenomenon of money, I'd recommend The Theory of Money and Fiduciary Media by Ludwig von Mises. It's an old work. It's difficult to read, as most old works are. It's a long book, but it's quite profound. I think it's still quite useful to understand monetary phenomena, even cryptocurrencies, because he offers a kind of terminology and systematic thinking about money that helps to understand even cryptocurrency, I'd say. Then there's a short paper but it's also a booklet or a little book by Hayek. It's called The Denationalization of Money, and it's about the importance of competition in a monetary order. And I think that one was very influential, even with the creation of cryptocurrencies. I think it's pretty obvious that Satoshi Nakamoto has read if not only Hayek, maybe Mises as well. So I see the traces of Austrian economics quite obviously in his writings and his ideas. And then you can go back to Karl Menger. It's still quite readable, even though it was written in the end of the 19th century. His main works, there are not too many, so just Google Karl Menger and see what's available. There's an article, or quite a few articles, but one that has been translated to English about the emergence of money, whatever you can find from him, it's useful. But only if you're into theory. I've written a lot of books,
yes, I wanted
which are
to ask you,
more easier and more up to date for someone to get started. Only a few have been translated to English, and in particular the Austrian School for Investors has been translated to English, and it even has a chapter on cryptocurrency, even though it's quite old, or it was published a few years ago, 4 years ago, 5 years ago even. I'd recommend it, of course.
Is this the only book translated in English?
It's the one that I'd recommend now on economic subjects.
Okay. Thank you. I mean, you've written a lot of books. When did you do this?
Well, I tend to write fast, but they're not. It's not too many. It's feasible in the lifespan that I had. I started quite early to get interested in economics and philosophical political questions. Very early. I think age 14, the latest I'd say that I started reading economics.
Okay, then, It's quite a time. So thank you very much for your time and
You're
for
welcome.
the interview. It was very interesting. And I will post the links to your books in the show notes, and also the other books that you recommended, and also a link to the Scholarium. Thanks
a lot, Anita.
Bye.
Hat es Ihnen gefallen? Dann teilen Sie bitte den Podcast auf Facebook, Twitter oder LinkedIn. Wenn Sie Fragen zu diesem Podcast haben, hinterlassen Sie einen Kommentar auf der Podcast-Webseite unter anitaposch.com/podcast. Wollen Sie mehr über Bitcoin und Blockchains wissen, dann lesen Sie mein Buch oder besuchen Sie eines meiner Online-Seminare, bei denen ich Ihre Fragen auch direkt beantworte. Infos dazu finden Sie auf meiner Webseite unter anitaposch.com/Seminare. bitcoin.com/akademie.
Das war die heutige Ausgabe von Bitcoin & Co. Idee und Inhalte von Anita Posch, Schnitt von Katrin Eidenhammer.